Hi viewers, and welcome back to the Real-Time Forex Trader. If you see my previous videos, you'll see we've bagged a few profits this morning. We've literally a few seconds ago we had a nice little scalp on this, took 2 pips out of the market. Now we're waiting for our next trade. I'd like to see a pullback. I'm not really keen on shorting here at the bottom of the market, because if we put a trade on, it's going to be there. Where's it going next? 10-minute chart. It's coming. I mean, is that the bottom of a pullback and it's going to go up? Hourly. Looks like it's just coming through the trend line before it drops off again. It's dropping again. That's making new lows. So 93, that's only 1.5 pip pullback. It's not a lot. It's not quite enough to tempt me in. And this is the problem. If you're tempted in too early, you know, and you've shorted here and the market rises, it's this short down here that's going to be the difficult one to get out of. But it's pulled back there and now it's going lower. So maybe I should have been shorting that. Maybe it's going to grind lower for half an hour. Well, let's wait for a pullback. We're going to get one at some stage. You see, this is where fear of missing out comes in. You might be tempted to sell right here at the bottom of the market, and that's fine if the market continues, but it might not. And I've been caught like this before, and I've posted on my previous videos about how not to get caught short selling short at the bottom of the market. And look, we're coming up to a round level 99, 80, 98, 90. Is it going to go? It's a psychological level rather than a technical level. No, it is continuing to drop. So if we had shorted here, we'd be closing these out. But look how far this is away from the trend line. And if any of you have come across the term mean reversion, it's a mathematics term, and it's by and large saying that prices tend to revert back to the mean. Well, this is a long way away relatively to the trend line and to this sort of area. So is it likely to pull back from there? Yes. If you put your shorts on now at the bottom of the market, as it reverts back to a mean, you're likely to get caught. That's why I don't like short selling at the bottom of the market. I mean, that was a nice pullback. That was a bit of a pullback, and you could have got shorts on there, and that pullback. That was only a small pullback. Here we go, we're pulling back. I mean, it's gone that far down, you'd have thought it might end up coming back up to here. 5 pips. Here we go, see, it's come back. See, now we could put a short on. We're 3 pips off the bottom of the market, but it could well pull back to here. Another 5 pips, easily. We'll put a stop loss on 99.12, that'll do. And we'll put a take profit on. So we sold at 91, 87. Where's 87? Too low. Put it at 89. So we sold at 91.4. And as you can see, it's come back into the middle of the trend lines. It could well fall off from here. Coming up to that trend line, and it could fall off from that. So 91.4. Yeah, I just like this a bit higher if I'm going to put another short on. In fact, I might increase my position size. 92.8 is 1 pip higher, so we can have one on there. Right, open these up to multiple positions. 99.12 and 98.89. Right, we've got both of those on. Right, let's get ready. I mean, this could well pull back to here quite easily. And as you can see, markets move in waves. Here are all the little waves. There we go, we might be able to get another one on. So we shorted at 92.7, 93, I'd like 94 would be a good short. That's coming up above that now. That makes you think it might have a run up. From there. Out of interest, are any of you classic car enthusiasts? I am. I've been interested in Jaguars for, I don't know, most of my life. My father had one when he was a young man. I don't really remember it. He had a Mark 1, Mark 2s. I let him loose in an XJS I had once, and he was like a schoolboy again. Right, here we go. Coming back down. So there is a classic car channel that I subscribe to, Edgehead Restorations. It's full of interesting stuff. Hundreds of cars on there. He's always tinkering with them. He's what you'd call an English enthusiast. He's very eccentric. He has a wealth of knowledge which he's happy to share, and some of his viewing is very interesting. Some of it's just plain eccentric, but I'm normally having a look on there to see what he's up to and what he's having trouble with and how he fixes things, because he does manage to fix things. He's fixed most of the stuff I've ever seen him have problems with. So coming back to this, we should have had that profit, and then we could have got the shorts back on again. I just wanted to see it go a bit lower. And look, see, the market went lower than 89, but that price didn't. And that shows you the difference between mid prices and bids and offers and what the market really does. Because look, that looks like it would have been a fabulous time to close out. But the reality is that the bid, the offer, didn't get to that level, or didn't get to this level where my take profit was. Anyway, coming back up, opportunity missed. What am I talking about there? I'm talking about here, aren't I? I'm getting senile in my old age. And, you know, I should have had that pound profit. It was in profits there, and I'd have been looking for my next short again here. Bang, look at them, 94s. Another one on there. See, foolish schoolboy error, chatting away, saw the profits there, distracted, and I didn't take them. I should have taken them, put the money in the bank, waited for the next trade. That is scalping. Too many schoolboy errors going on here. 90 days, the stop loss set too high, should be about here. Come on, back on side. Oh no, oh, here we go, £7 in the bank. We'll have that. Right, look for the next trade. There we go. Quick, easy scalp. Schoolboy error made in not missing the first one. We're going to wait for a pullback now. And thank you for watching. I hope you enjoyed it. Please give me a like if you do. Please subscribe.